Question 1. Which of the following cyber threats is most likely to involve an attacker gaining unauthorized access to a company's network to encrypt files and demand payment for decryption? A. Phishing. B. Ransomware. C. Insider threats. D. Distributed denial of service, DDoS. Answer. B. Ransomware. Explanation. Ransomware is a type of malicious software, malware, that targets an organization's data, encrypting files or locking access to them, then demands payment, ransom, to restore access. This attack is highly disruptive, potentially causing significant downtime and financial loss. Unlike phishing or DDoS attacks, which typically aim to deceive users or disrupt service without direct ransom demands, ransomware specifically involves extortion for financial gain. Insider threats refer to individuals within an organization misusing their access, and DDoS attacks are aimed at overloading network resources to cause service interruptions. Question 2. Mr. Lewis is the Chief Information Officer (EO) of a mid-sized manufacturing company in Ohio. He is considering purchasing a cyber insurance policy. During the underwriting process, the insurer evaluates his company's cybersecurity posture by reviewing its current IT infrastructure, employee training programs, and previous data breach incidents. Based on these assessments, the insurer recommends specific improvements before offering coverage. Which of the following is most likely to be the focus of the insurer's recommendations? A. Increasing the amount of the company's annual revenue. B. Enhancing multi-factor authentication for access to sensitive data. C. Offering cyber insurance for third-party vendors. D. Reducing the company's insurance premium by bundling with other policies. Answer. B. Enhancing multi-factor authentication for access to sensitive data. Explanation. The insurer is most likely focusing on improving the company's cybersecurity posture to reduce risk and minimize potential coverage gaps. Multi-factor authentication (MFA) is a key security measure that helps prevent unauthorized access to sensitive data and systems. Insurers often encourage companies to implement MFA as it significantly reduces the likelihood of breaches. Increasing revenue does not directly impact the company's cybersecurity readiness, and while bundling policies or offering third-party coverage might be beneficial, they are not specific to improving the company's cybersecurity defenses. Question 3. Which of the following is the primary reason why Ohio's data breach notification laws require businesses to notify affected individuals and the Ohio Attorney General's office within a specific time frame after discovering a breach? A. To ensure that businesses can recover their losses from the breach. B. To enable consumers to take protective measures such as changing passwords or freezing credit. C. To allow the business to claim cyber insurance coverage for the breach. D. To ensure the business is not liable for damages resulting from the breach. Answer. B. To enable consumers to take protective measures such as changing passwords or freezing credit. Explanation. Ohio's data breach notification laws are designed to protect consumers by ensuring they are promptly informed of breaches that could compromise their personal information. This enables consumers to take necessary actions such as changing passwords or placing fraud alerts on their accounts to mitigate potential harm. While recovering losses and claiming insurance are important considerations for businesses, the primary goal of the notification requirement is to protect individuals. Limiting liability is not the focus of the law, as businesses still face responsibilities even after notifying consumers. Question 4. Which of the following is not typically covered by a first-party cyber insurance policy? A. Business interruption losses due to a ransomware attack. B. Costs associated with data breach notification and credit monitoring for affected individuals. C. Legal fees for defending against a privacy liability lawsuit. D. Expenses related to restoring lost or damaged data. Answer. C. Legal fees for defending against a privacy liability lawsuit. Explanation. First-party coverage in cyber insurance typically covers direct losses or expenses incurred by the insured business, such as business interruption due to a cyber event, e.g., ransomware attack, costs for breach notification and credit monitoring, and data restoration. However, defending against a privacy liability lawsuit falls under third-party coverage, which provides protection for claims made by third parties, e.g., customers, partners, due to the insured cyber negligence or breach of privacy obligations. Legal fees for defending against privacy liability are therefore not covered by first-party policies, but rather by third-party liability coverage. Question 5. Which of the following cybersecurity frameworks is most commonly used for assessing an organization's cybersecurity posture in relation to cyber insurance underwriting? A. National Institute of Standards and Technology NIST Cybersecurity Framework. B. Health Insurance Portability and Accountability Act HIPAA. C. Payment Card Industry Data Security Standard ECESS. D. General Data Protection Regulation E. Answer A. National Institute of Standards and Technology NIST Cybersecurity Framework. Explanation: the NIST cybersecurity framework is widely recognized and used by both organizations and insurers to assess an entity's cybersecurity maturity and posture. It provides a comprehensive structure for identifying, protecting, detecting, responding to, and recovering from cyber risks, and is commonly employed by insurers during the underwriting process to evaluate a company's ability to mitigate and manage cyber threats. HIPAA, PCI DSS, and GDPR are more specialized frameworks that focus on specific sectors or types of data, healthcare, payment card data, personal data protection, and are less commonly used as a general cybersecurity posture framework for underwriting. Question 6. In the event of a cyber incident involving a data breach, which of the following steps should be prioritized according to the claims process for cyber insurance? A. Immediately notifying the media to prevent further damage to the company's reputation. B. Gathering and preserving evidence related to the breach for forensic analysis. C. Attempting to resolve the breach without reporting it to the insurance provider. D. Offering compensation to affected individuals without consulting legal counsel. Answer B. Gathering and preserving evidence related to the breach for forensic analysis. Explanation: when a data breach occurs, the first step is to gather and preserve evidence, as this is critical for determining the cause, scope, and impact of the breach. Forensic experts will analyze the breach to understand how the attack occurred and what vulnerabilities were exploited. This information is essential for both the insurance claims process and any legal actions that may follow. Notifying the media or offering compensation prematurely can complicate the investigation or violate legal requirements. It's crucial to follow a methodical approach, reporting the incident to the insurer and involving legal counsel as appropriate to ensure proper handling of the breach. Question 7. A company's cyber insurance policy includes a social engineering fraud coverage clause. Which of the following scenarios would this coverage most likely apply to? A. A hacker exploits a vulnerability in the company's network to steal financial data. B. A company employee is tricked into transferring money to a fraudulent bank account after receiving a fake email that appears to be from the CEO. C. A business suffers financial loss due to a distributed denial of service DDoS attack. D. A third-party vendor experiences a breach exposing the company's data. Answer B. A company employee is tricked into transferring money to a fraudulent bank account after receiving a fake email that appears to be from the CEO. Explanation: social engineering fraud coverage typically protects against incidents where an employee is deceived into taking an action such as transferring money due to fraudulent communications or deceptive tactics. In this case, the employee was tricked into transferring funds to a fraudulent account after receiving a fake email that appeared to be from the CEO. This is a classic example of a social engineering attack, which is distinct from other types of cyber threats such as malware or DDoS attacks. The other options involve breaches or attacks that would be covered under different types of coverage, e.g., first-party data loss, third-party vendor coverage. Question 8. Which of the following cyber risks is most associated with vulnerabilities arising from third-party vendors or contractors? A. Ransomware attacks initiated by external hackers. B. A security breach in the vendor's system exposing sensitive company data. C. Data loss due to an internal employee's negligence. D. System downtime caused by a distributed denial of service DDoS attack. Answer B. A security breach in the vendor's system exposing sensitive company data. Explanation: third-party vendor risks occur when external contractors or service providers have access to a company's systems or data, and those vendors become the target of cyber attacks or experience their own security breaches. If the vendor's system is compromised, it can expose the company's sensitive data, potentially leading to a data breach. Ransomware attacks and DDoS attacks may be external threats, but they are not typically directly linked to third-party vendor vulnerabilities. Data loss from employee negligence is an internal risk, and DDoS attacks primarily affect the company's own systems. Question 9. Under Ohio's data protection laws, which of the following is a primary responsibility for businesses once a data breach involving personal information is discovered? A. To immediately notify the Ohio Department of Insurance and provide compensation to affected individuals. B. To inform the public via a press release and pay for all affected parties' identity protection services. C. To notify affected individuals within a specific period, along with offering credit monitoring services if necessary. D. To notify law enforcement authorities, file a claim with cyber insurance, and wait for further instructions. Answer: C. To notify affected individuals within a specific period, along with offering credit monitoring services if necessary. Explanation: Under Ohio's data breach notification laws, businesses must notify affected individuals within a specific time frame, usually within 30 days, if personal information has been compromised. In addition to notifying affected individuals, businesses are often required to offer credit monitoring services or other assistance to help mitigate potential harm to those affected. While notifying the Ohio Department of Insurance and law enforcement may be necessary in some cases, the primary responsibility is to notify individuals and provide resources to protect them from identity theft or fraud. Question 10. Which of the following best describes the role of risk mitigation requirements in cyber insurance underwriting? And insurers will require the implementation of certain cybersecurity measures before providing coverage to reduce the likelihood of claims. B. Risk mitigation requirements are only relevant when the insured has a history of multiple data breaches. C. Insurers are not concerned with cybersecurity measures and only base underwriting decisions on past claims data. D. Risk mitigation measures only apply to large companies with complex IT infrastructures. Answer: A. Insurers will require the implementation of certain cybersecurity measures before providing coverage to reduce the likelihood of claims. Explanation: During the underwriting process for cyber insurance, insurers assess the risk associated with providing coverage and may require the implementation of specific cybersecurity measures such as firewalls, encryption, or employee training to reduce the likelihood of a successful cyber attack. By requiring these measures, insurers aim to lower the potential for future claims and ensure the insured has an adequate cybersecurity posture. Risk mitigation is a key factor in underwriting and is not limited to companies with prior breaches or large IT infrastructures. Question 11. Which of the following best describes the function of a data breach response plan under a cyber insurance policy? A. It outlines the steps the insured must take to prevent future breaches after a claim has been made. B. It provides a framework for responding to data breach and managing the resulting legal and regulatory obligations. C. It defines the limits of coverage for losses caused by a data breach. D. It allows the insured to obtain compensation for reputational damage resulting from a breach. Answer: B. It provides a framework for responding to data breach and managing the resulting legal and regulatory obligations. Explanation: a data breach response plan is typically required by insurers as part of the policy terms. It provides clear guidelines for how a company should respond to data breach, including legal and regulatory requirements, notification procedures, and communication with affected individuals. This plan ensures that the company can quickly manage the breach, minimize damage, and comply with laws, reducing the potential for severe consequences. Question 12. Which of the following is NOT typically included under cyber liability insurance coverage for a data breach? A. Forensic investigation costs to determine the cause and scope of the breach. B. Legal fees for defending against regulatory investigations and lawsuits. C. Compensation for the stolen data itself, including trade secrets. D. Costs associated with notifying affected individuals and providing credit monitoring. Answer: C. Compensation for the stolen data itself, including trade secrets. Explanation: Cyber liability insurance typically covers costs such as forensic investigations, legal fees, notification, and credit monitoring services. However, it does not cover the value of the stolen data itself. In the case of intellectual property or trade secrets, a separate policy or legal remedy might be needed. Cyber insurance is designed to cover the aftermath of a breach, not the intrinsic value of the stolen assets. Question 13. What is the significance of the duty to defend clause in a cyber insurance policy? A. It requires the insurer to cover the costs of a forensic investigation following a cyber event. B. It obligates the insurer to pay for legal defense if the insured faces third-party lawsuits due to a cyber incident. C. It allows the insurer to independently negotiate settlements with affected parties. D. It limits the insured's responsibility to notify affected individuals after a breach. Answer B. It obligates the insurer to pay for legal defense if the insured faces third-party lawsuits due to a cyber incident. Explanation. The duty to defend cause is a critical feature of cyber liability policies. It obligates the insurer to provide legal defense when the insured faces lawsuits or regulatory actions stemming from a cyber incident. This is particularly important in cases where the insured is accused of negligence, breach of data protection laws, or other legal violations related to a cyber attack. Question 14. Which of the following is considered a pre-breach activity that can help reduce cyber insurance premiums? A. Conducting a data breach investigation after a cyber event. B. Implementing strong encryption measures for sensitive data. C. Offering identity theft protection services to customers after a breach. D. Reporting the breach to relevant authorities within 48 hours. Answer B. Implementing strong encryption measures for sensitive data. Explanation. Pre-breach activities are actions taken before a cyber event occurs. Implementing strong encryption measures to protect sensitive data is a proactive step that can reduce a company's exposure to risk and potentially lower its cyber insurance premiums. Other activities listed, such as conducting investigations or offering post-breach services, occur after the breach and thus are not considered pre-breach risk mitigation. Question 15. What type of cyber insurance coverage typically protects against losses due to a third-party vendor's breach that compromises the insured company's data? A. Data breach liability coverage. B. Third-party liability coverage. C. Network security liability coverage. D. Vendor breach coverage. Answer D. Vendor breach coverage. Explanation. Vendor breach coverage is a specific type of cyber insurance designed to protect the insured company in the event that a third-party vendor's breach compromises the insured's data. While other types of coverage like network security liability or data breach liability could provide some protection, vendor breach coverage is tailored to address risks arising from third-party vendors who may have access to the insured's network or sensitive data. Question 16. Which of the following is a common exclusion found in cyber insurance policies regarding acts of war? A. Cyber attacks resulting from government-sponsored hacking. B. Data loss from unauthorized access by an employee. C. Breach of contract by a third-party vendor. D. Loss of digital assets from a ransomware attack. Answer A. Cyber attacks resulting from government-sponsored hacking. Explanation. Cyber insurance policies often exclude coverage for acts of war, which can include cyber attacks sponsored by governments or military groups. These types of attacks are considered acts of geopolitical conflict and fall outside the scope of standard cyber insurance coverage. Data loss, breach of contract, or ransomware attacks are more likely to be covered under typical policies, depending on the policy terms. Question 17. A company purchases a cyber insurance policy with a $1 million limit for first-party losses and a $500,000 limit for third-party claims. After a cyber attack, the company incurs $600,000 in business interruption losses and $200,000 in legal fees for defending against lawsuits from affected customers. How much will the insurer pay for the losses? A. $600,000. B. $800,000. C. $1 million. D. $1.2 million. Answer B. $800,000. Explanation. In this scenario, the company will receive coverage for both first-party losses, business interruption, and third-party claims legal fees. The insurer will pay up to $1 million for first-party losses. The $600,000 business interruption loss falls within this limit, and $500,000 for third-party claims. The $200,000 legal fees fall within this limit. The total payout will be the sum of the first-party and third-party limits, which is $800,000. Question 18. Under a cyber liability insurance policy, which of the following scenarios would typically trigger the extortion coverage? A hacker demands a ransom payment to avoid releasing sensitive company data publicly. B. A company employee is caught selling confidential data to a competitor. C. A vendor experiences a data breach that exposes customer information. D. A company's network is damaged by a denial of service DOS attack. Answer A. A hacker demands a ransom payment to avoid releasing sensitive company data publicly. Explanation. Extortion coverage under cyber liability insurance is designed to protect businesses in the event they are targeted by cyber criminals demanding a ransom. This typically occurs in scenarios where hackers threaten to release, destroy, or withhold access to sensitive data unless a payment is made. Other situations, such as internal data theft or DOS attacks, would not fall under extortion coverage. Question 19. Which of the following is a key difference between cyber liability insurance and data breach insurance? A. Cyber liability insurance covers all forms of cyber attacks, while data breach insurance only covers breaches involving personal information. B. Data breach insurance covers both first-party and third-party costs, while cyber liability insurance covers only first-party losses. C. Cyber liability insurance is focused solely on protecting against ransomware, while data breach insurance covers any form of data theft. D. Data breach insurance does not cover regulatory fines, while cyber liability insurance typically includes coverage for fines. Answer A. Cyber liability insurance covers all forms of cyber attacks, while data breach insurance only covers breaches involving personal information. Explanation. Cyber liability insurance is a broader category that covers various types of cyber attacks, such as ransomware, phishing, and denial of service attacks, along with the associated costs of defending against third-party claims, restoring systems, and business interruption. Data breach insurance, on the other hand, is specifically designed to cover breaches involving personal information or other sensitive data. It typically focuses on costs related to notification, credit monitoring, and other breach-related expenses, rather than the full spectrum of cyber risks. Question 20. Which of the following would most likely require a company to purchase cyber liability insurance if they do not already have it? A. The company has a strong internal cybersecurity policy and no history of cyber attacks. B. The company processes sensitive customer data and is subject to strict data protection regulations. C. The company is involved in manufacturing but does not use digital technologies in its operations. D. The company's primary business involves physical goods, not online services or data management. Answer. B. The company processes sensitive customer data and is subject to strict data protection regulations. Explanation. Companies that handle sensitive customer data and are subject to data protection regulations such as GDPR or UPA are at a higher risk for cyber incidents like data breaches and require cyber liability insurance. This coverage helps manage the risks of such breaches, including legal and regulatory obligations. Companies without significant digital operations or sensitive data processing may not have as high of a need for this type of insurance. Question 21. Which of the following is typically not covered by a cyber liability insurance policy? A. Data restoration costs after ransomware attack. B. Reputational damage caused by a data breach. C. Regulatory fines resulting from non-compliance with data protection laws. D. Business income loss due to a system outage from a cyber attack. Answer. C. Regulatory fines resulting from non-compliance with data protection laws. Explanation. Cyber liability insurance generally covers the costs of data restoration, business income loss due to system downtime, and reputational damage. However, most policies exclude regulatory fines, penalties, or punitive damages arising from non-compliance with data protection laws. Companies are typically expected to manage compliance on their own or through other types of insurance. Question 22. Which of the following best describes the social engineering coverage provided by many cyber liability policies? A. Coverage for fraudulent data breaches caused by insider threats. B. Coverage for losses resulting from phishing or pretexting schemes to manipulate employees into divulging confidential information. C. Coverage for the costs of securing a company's network after a cyber attack. D. Coverage for cyber extortion threats made by hackers. Answer. B. Coverage for losses resulting from phishing or pretexting schemes to manipulate employees into divulging confidential information. Explanation. Social engineering coverage under cyber liability insurance is designed to protect a company from losses caused by scams like phishing, pretexting, and other types of deceptive tactics where an attacker tricks employees into providing confidential information or making unauthorized transactions. This is distinct from traditional hacking methods. Question 23. What is the primary function of a cyber insurance policy's retroactive date? A. It determines the policy's coverage for incidents that occurred prior to its effective date. B. It establishes the maximum financial payout for any claim. C. It outlines the policyholder's responsibilities in preventing breaches. D. It specifies the type of cyber threats that the policy covers. Answer A. It determines the policy's coverage for incidents that occurred prior to its effective date. Explanation. The retroactive date is an important feature in many cyber insurance policies, especially when transitioning from one insurer to another. It sets a boundary for which incidents that occurred before the policy's start date are covered. Claims related to incidents before this date are typically excluded from coverage unless the event was reported during the policy period. Question 24. Which of the following is a typical requirement for a company to qualify for cyber insurance coverage? A. The company must have a dedicated cyber security team in place. B. The company must provide an annual report on its financial performance. C. The company must maintain a documented incident response plan. D. The company must have less than 500 employees. Answer C. The company must maintain a documented incident response plan. Explanation. Most cyber insurance policies require businesses to have a documented incident response plan. This plan outlines how the organization will respond to a cyber attack, including communication strategies, mitigation efforts, and recovery steps. Having such a plan demonstrates the company's commitment to managing cyber risks and can lead to better coverage terms. Question 25. Which of the following would be covered by a cyber liability insurance policies of first-party coverage? A. Costs to defend against a class action lawsuit from customers affected by a data breach. B. Expenses related to notifying customers of a data breach. C. Legal fees for defending against a regulatory investigation. D. Claims filed by third parties for data theft due to a breach. Answer B. Expenses related to notifying customers of a data breach. Explanation. First-party coverage under cyber liability insurance policy covers losses directly incurred by the policyholder. This includes costs like data breach notification, credit monitoring services, and forensic investigation fees. Third-party claims, such as lawsuits or regulatory investigations, would fall under third-party coverage. Question 26. Which of the following is a key component of a cybersecurity posture assessment? A. An evaluation of the company's physical security systems. B. A review of the company's compliance with industry-specific regulations. C. A detailed risk assessment and evaluation of potential cyber threats. D. An analysis of the company's public relations strategy. Answer C. A detailed risk assessment and evaluation of potential cyber threats. Explanation. A cybersecurity posture assessment focuses on evaluating the company's current defenses against cyber threats. This includes conducting a risk assessment, identifying vulnerabilities, and understanding potential cyber threats that could affect the organization. The goal is to ensure the company has the appropriate policies, systems, and protocols in place to mitigate these risks. Question 27. In the event of a ransomware attack, which of the following actions would likely be covered under a typical cyber liability insurance policy? A. Reimbursement for the ransom payment. B. The cost of negotiating with the attackers. C. Business interruption losses during the period of recovery. D. Legal fees for defending against any regulatory investigation due to the breach. Answer C. Business interruption losses during the period of recovery. Explanation. In a ransomware attack, cyber liability insurance typically covers business interruption losses that occur during the period when the company's systems are unavailable or disrupted, while the ransom itself may be excluded or subject to limitations in some policies. Losses related to downtime and operational interruptions are usually covered. Question 20. Which of the following types of data is typically considered personal identifiable information? PA. Under most cyber liability policies, A. Company email addresses. B. Customer credit card numbers. C. Internal network passwords. D. Data stored on a company's servers. Answer B. Customer credit card numbers. Explanation. Personal identifiable information (PA) refers to data that can be used to identify an individual, such as names, addresses, social security numbers, and credit card numbers. Credit card numbers are specifically considered PA because they can be used to personally identify a person or commit fraud. Question 29. Which of the following scenarios would most likely be covered under a network security liability policy? A. A data breach due to an employee accidentally sharing sensitive information. B. A denial of service DOS attack that disrupts a company's network. C. A vendor breach where sensitive customer data is exposed. D. A lawsuit from a customer whose information was exposed in a breach. Answer B. A denial of service DOS attack that disrupts a company's network. Explanation. Network security liability insurance is designed to cover incidents where the security of a company's network is compromised, leading to a cyber attack such as a DOS attack. This type of coverage includes financial losses or costs associated with protecting or restoring the network's functionality. It does not typically cover breaches from human error or third-party vendors, which are covered under different policy clauses. Question 30. Which of the following best defines data restoration coverage in a cyber liability insurance policy? A. Coverage for the costs of replacing physical assets damaged during a cyber attack. B. Coverage for legal fees associated with defending against third-party claims. C. Coverage for the costs of restoring lost or corrupted data following a cyber incident. D. Coverage for the loss of business income due to downtime after a cyber attack. Answer: C. Coverage for the costs of restoring lost or corrupted data following a cyber incident. Explanation: data restoration coverage is designed to help businesses recover lost or corrupted data after a cyber attack, such as a ransomware attack or system compromise. This coverage helps offset the costs of restoring important files, databases, or systems to their pre-attack state. It typically includes the cost of forensic investigations, data recovery efforts, and potential professional services to fix the data.